In this video, you'll discover how to double, triple, or even quadruple your $1,000 quickly with 5 exciting methods you won't want to miss. Inspired by the famous legendary investor Warren Buffett. Let's begin with method number 1, purchasing stocks. Meet Jay, an average man in his 40s who found himself at a crossroads. His bank account wasn't exactly successful, and he was itching to change his financial fate. Jay had heard whispers about Warren Buffett's legendary investment wisdom, and the idea of transforming $1,000 into a fortune had him interested. Jay, like a kid in a candy store, thought he could make a quick buck by playing the stock market like a pro. He dived in head first, throwing his money at whatever companies seemed hot at the moment. Jay didn't really have patience. He'd buy a stock in the morning and check its price by lunchtime, already plotting his next move based on the smallest market hiccup. His wallet might have been light, but his heart raced like a Formula One car. One day, Jay had a revelation. He realized he was behaving like a squirrel on a caffeine rush, hopping from one tree to another, never eating the nuts he gathered. That's when he thought, hey, maybe there's something to that Warren Buffett guy. Jay put on his Buffett-worthy thinking cap. He began to research companies like a detective hunting down clues. He wasn't after flashy trends. He was after solid businesses with a proven track record. He looked for those consistent profit growers, with CEOs who knew their stuff, and plans that went beyond, let's hope for the best. Jay learned to be patient, not swayed by the stock market's wild roller coaster. He picked a technology company that seemed like it had its act together. He wasn't chasing quick gains. He was aiming for lasting wealth. Jay didn't check the stock price every 15 minutes. He set a reminder to review it every few months, much to the surprise of his twitchy fingers. Jay's chosen company began to shine. Its stock price climbed higher and higher. It was like watching a magic beanstalk grow, but with dollar signs instead of beans. And guess what? The company didn't just sit there looking pretty. It shared its earnings with Jay and other shareholders through dividends. That's right, money was coming his way without him even having to lift a finger. Jay grinned at his growing investment. He couldn't help but crack a joke. Who needs roller coasters when you've got the stock market? In the end, Jay learned the art of buy and hold, just like his newfound mentor Warren Buffett. He found stocks that were like old friends, reliable and full of potential. He understood that quick wins were like sugary snacks, fun at the moment, but not great for the long haul. With a patient spirit and a bit of Buffett-esque wisdom, Jay turned his $1,000 gamble into a financial jackpot that would make even the Oracle of Omaha proud. So, next time you're tempted to dance with market trends, think of Jay and his roller coaster ride, and consider following in his stead on the road to true financial prosperity. Jay's life changed a lot when he found out about affordable index funds. He started learning and investing in low-cost index funds, and, as expected, good things happened. Now, let's see what Jay did to make all of this happen. Method number 2. Learn about the power of low-cost index funds. Jay had always dreamed of finding a hidden treasure, but his bank account seemed to have a different story to tell. He wished for a financially savvy move that wouldn't drain his pockets, and that's when he stumbled upon the tale of low-cost index funds. Curiosity piqued, Jay ventured into the depths of investment knowledge, determined to reveal the secrets of these low-cost index funds. He knew the stock market, chasing after the elusive next big thing. He'd fallen prey to flashy fund managers promising astonishing returns, only to find his hard-earned money evaporate quicker than water on a hot summer day. Jay realized he'd been chasing the wrong dreams, trying to sprint through a marathon. The short-term excitement left him financially exhausted and perplexed. In a moment of realization, Jay decided to take a leaf out of the legendary Warren Buffett's playbook. He embraced the concept of patience, a trait that seemed rarer than a unicorn in the investment world. Jay discovered that low-cost index funds were like a breeze of fresh air in the smog of finance. These funds mirrored the market's dance, eliminating the need for Jay to second-guess the unpredictable twists and turns. It was like having a trusty GPS guiding him through a maze. Imagine low-cost index funds as your financial sidekick. They're the superheroes of the investment world, minus the flashy capes. These funds work by grouping together bits of different companies' stocks, creating a diverse portfolio in one shot. It's like getting a mixtape of stocks from various companies, reducing the risk if one company's stock decides to take a nosedive. But here's where the magic really happens: low cost. These funds aren't the money-eating monsters some investments can be. They come with minimal fees, leaving more of your hard-earned cash intact. In simple terms, you're not shelling out a ton just to be part of the game. Think of it like this: you're not putting all of your financial eggs in one basket. You're spreading them out across a range of companies like a smart investor should. This means you're not hoping for a single huge success, but rather aiming for consistent growth over time. It's a bit like planting seeds in different spots. If one doesn't grow well, the others might surprise you. So, low-cost index funds? They're like your investment safety net, offering diversity and growth without the financial drama. With index funds, Jay adopted a buy-and-hold strategy, treating his investments like fine wine, aging gracefully over time. He chuckled at the irony. He once chased quick gains, only to realize that steady wins the race. These funds spared him the headache of analyzing endless graphs and market jargon. Jay could focus on enjoying his life while his money was hard at work, mirroring the S&P's hustle. As Jay sipped his morning coffee, he imagined himself on that sun-kissed beach, soaking in the soothing waves of long-term growth. He was happy at how his financial path had shifted from sprinting to strolling, yet he was making more progress than ever. His friends teased him about trading his racing shoes for flip-flops, but Jay simply grinned. He knew he was building a stable future, one that didn't involve chasing mirages. With a hint of sarcasm and a sprinkle of wisdom, Jay's journey became a reminder that sometimes the best treasures are found when you slow down and let time do its magic. Finding Jay's journey inspiring? Trust me, if Jay can do it, anyone and everyone can definitely do it. For more inspiring stories, make sure to leave a like on this video, subscribe to Investing 101, and turn on the notification bell to always stay up to date with our content. And don't forget to share this video with your friends and family and educate them. Moving on. When Jay stumbled upon real estate crowdfunding platforms, a whole new world of investment opened up. Curious to see how it worked for him? Let's take a look at Jay's journey and unfold the strategies that led to his success. Method number 3. Investing in real estate crowdfunding platforms. Eager to make his hard-earned $1,000 work magic, he dove into the world of crowdfunding real estate platforms. With the charisma of Warren Buffett's investment wisdom guiding him, Jay believed he was about to crack the code to a prosperous future. Yet, what Jay didn't realize was that his excitement was dancing dangerously close to the line of blind enthusiasm. Instead of carefully considering his options, he jumped into various real estate projects, enticed by the allure of quick returns. He was like a kid in a candy store, grabbing anything that looked sweet without paying attention to the price and the ingredients. But, as fate would have it, Jay's recklessness came back to bite him. The projects he had chosen without much thought turned out to be risky endeavors. Rental income wasn't as smooth as he had imagined, and property values remained stagnant. Jay found himself stuck in a loop of frustration, his investment barely inching towards growth. Jay realized he needed a dose of wisdom and perhaps a hint of sarcasm to navigate his financial venture. He took a step back and revisited Warren Buffett's principles, a sort of economic soul-searching. With a chuckle, he admitted that even the Oracle of Omaha wouldn't invest in something without thorough research. Jay decided to adopt a more selective approach, just like Warren's favorite ice cream flavors. He dedicated time to understanding the projects he was investing in. Instead of chasing the shiny promise of overnight riches, he focused on properties that aligned with his long-term goals. Like a clever detective, he examined the risk-reward profiles, diving into details like a Sherlock hunting for clues. His choices became strategic, and he diversified his investments, realizing that a balanced portfolio was the key to weathering storms. As the dust settled, Jay started reaping the rewards of his newfound wisdom. Rental income flowed in more steadily, and some properties even showed signs of appreciating in value. With a wink and a nod to Warren, Jay recognized that success wasn't about quick wins, but rather a marathon fueled by informed choices. In the end, Jay's story was a lesson in embracing both the seriousness and the humor of investing. As he sipped his coffee, chuckling at his early mistakes, he knew that his journey mirrored the very principles he had aspired to follow. With each passing day, his portfolio grew more vital, a testament to the power of taking a step back, learning, and approaching investments with a hint of wit. And so, Jay continued his financial adventure, guided by Warren Buffett's timeless advice and a sprinkle of his own playful wit, building a future that was as prosperous as it was enjoyable. Ever wondered if those social media dopamine hits could fill your wallet too? No, right? Jay rode that wave, and now? Well, let's just say he's living proof that social media isn't just for likes, but for serious cash. Let's look at Jay's journey and uncover how he used the digital tide to succeed. Method number 4: putting money into social media platforms. Jay's days were spent in a cubicle, staring at spreadsheets, dreaming of a life less ordinary. He had always admired those who had ventured into the realm of social media, building vibrant online personas and raking in cash. If only, Jay thought, I could turn my scrolling addiction into something profitable. One day, Jay decided to take the plunge. With a modest sum of $1,000, he went on a journey to harness the power of social media. He started small, choosing Instagram as his playground. Jay began sharing his quirky sense of humor, his daily escapades, and his attempts at cooking, which often ended in hilarious disasters. His posts began to attract attention. People found solace in his relatable anecdotes and his willingness to embrace his quirks. Brands took notice, sliding into his DMs with offers to promote their products. Jay, now an accidental lifestyle influencer, didn't hesitate to dive into paid promotions. He joked about the absurdity of selling detox teas when he couldn't even resist the temptation of a late-night pizza. As Jay's follower count skyrocketed, he got to know about affiliate marketing. With a wink and a nudge, he shared links to his favorite gadgets, earning a tidy commission with each sale. He poked fun at his own sales tactics, admitting that he couldn't even fix a leaky faucet. Yet, he was now a proud seller of plumbing supplies. But Jay didn't stop there. He took a portion of his growing earnings and invested it back into his newfound passion. He upgraded his camera gear, transforming his bedroom into a makeshift studio. He even hired a fellow social media enthusiast to help with video editing, a move he cheekily called his social media entourage. Over time, Jay's online presence evolved into a brand of its own. He launched a line of merchandise featuring his catchphrases and inside jokes, which quickly became a hit among his followers. His inbox was flooded with messages from people who found a source of laughter and connection in his content. As the years rolled by, Jay had not only multiplied his initial investment, but had also transformed his life. He had become a testament to the power of social media, a middle-aged man turned accidental influencer, all the while making the world laugh one post at a time. Warren Buffett may not have predicted this path, but he'd surely crack a smile at Jay's unconventional journey from cubicle dweller to social media sensation. I'm about to reveal a golden ticket that doesn't just double, but triples your first $1,000. It's like adding rocket fuel to your savings. How? By hitting your subscribe button for a direct route to our treasure of wisdom. Investing 101 is your secret map to triumph. Investing 101 is your secret map to financial triumph, filled with gems that'll light up your path to success. Don't miss out. Join us on this epic adventure, and let's make your financial dreams take flight. Learning might feel like mental gymnastics, but guess what? Jay turned his brain power into a gold mine. While we're all soaking up knowledge, Jay took it a step further, and now Get ready to be amazed as we reveal how investing in your own smarts, just like Jay, can lead to a treasure trove of opportunities. Method number 5. Invest in your knowledge. Jay was not quite sure where his financial compass was pointing. Jay had heard the buzz about high-income skills and transformative investments, but the words seemed more like code from a distant land. He was desperate for financial security, yet the path to that pot of gold remained elusive. Jay, like many of us, had fallen into the trap of stagnation. Stuck in the rut of his routine, he often thought, "Who needs these highfalutin skills? I've got my job after all." He was content. Well, maybe too content. Ignoring the world's whirlwind change, Jay watched as the waves of opportunity surged by. His inner circle of friends seemed to be mastering these high-income skills, while Jay's expertise seemed confined to deciding which TV show to binge-watch. One fateful day, as Jay browsed through his feed, a spark ignited. A post proclaimed, "Warren Buffett says, invest in yourself." Jay laughed. "Invest? I'm no Wall Street wizard." But something in those words resonated with him. He realized he could be the master of his financial fate. Determined to turn the tide, Jay dipped his toes into the sea of online learning. With a grand budget of $1,000, which coincidentally was the sum of his latest impulse buys, he enrolled in coding courses. No more confused looks when his tech-savvy pals discussed Python or JavaScript. Jay dove in, his screen illuminated like a battlefield, pixels at war with his self-doubt. As his coding prowess grew, Jay discovered a hidden passion. He started creating websites and applications that danced with life. "Who knew lines of code could make things tick?" he mused, a grin creasing his face. With a witty swipe of his keyboard, Jay forged his digital path, setting up his own little corner of the vast internet. Jay's Digital Emporium. Soon the virtual coins started jingling. Freelancing gigs found their way to his inbox, and businesses, charmed by his skills, began knocking on his digital door. Jay chuckled. Who'd have thought these ones and zeros would pay the bills? But that wasn't all. Jay, with the flair of a modern-day bard, spun a mobile app that became the talk of the town. An app that became an overnight sensation, a pocket-sized marvel that answered people's daily conundrums. Finally, Jay chuckled, an app that helps you decide what to order when the menu has 100 options. As the sun set on Jay's journey, he marveled at the tapestry of his transformation. No longer tethered to a desk, he embraced his newfound freedom. Who needs office walls when the world is your playground, he quipped, sipping coffee in his backyard, surrounded by nature's symphony. Jay had cracked the code. He was no longer the sideline observer, but the star of his own financial story. With a twinkle in his eye, he looked back on his $1,000 investment that had multiplied into a symphony of zeros, dancing in his bank account. The tale of Jay reminds us that in the grand digital circus, every one of us holds a ticket to the show. The high-income skills are not locked in an ivory tower, but within our grasp, waiting to be woven into our own story of success. So go on, embrace your inner Jay, and let your skills ignite the path to your very own digital dominion. If an average man in his 40s like Jay can achieve financial prosperity, then you and I can as well. In the upcoming video, explore 19 practical frugal living tips inspired by Warren Buffett aided Max, another 50-year-old man in liberating himself from debt and transforming into a top-notch saver.